Welcome to the Explainer. So if you're feeling completely overwhelmed right now by the sheer number of investing apps popping up on your phone, you know what? You're absolutely in the right place. Today, we're going to just clear away all that marketing noise. We're giving you a clear, totally distraction-free roadmap to navigating this whole landscape. No fluff, just the exact facts you need to build your very first portfolio. Let's get into it.
It's incredibly intimidating out there, right? I mean, the current app landscape is just so flashy. It's packed with notifications and all these big promises of quick returns. But look, if you're a beginner just trying to start your first portfolio and actually build long-term wealth, all those bells and whistles, they can absolutely work against you. You really don't need a slot machine disguised as a brokerage account sitting in your pocket. You need a reliable financial tool. So with literally dozens of apps vying for your attention in 2026, which ones actually deliver? Here is our roadmap for today. First, we'll look at the investing app illusion. Then, why boring investing actually wins. Third, dodging those sneaky hidden app fees. Fourth, the actual steps to start investing. And finally, a head-to-head showdown, Webull versus Fidelity.
All right, part one, the investing app illusion and the real risks of gamified trading.
Okay, let's dive into this. A lot of the sleekest, most popular apps out there right now are purposefully designed to encourage high-frequency, active day trading. They use digital confetti, flashing push alerts, social leaderboards, basically anything to keep your thumbs tapping and your adrenaline pumping. But the sources consistently warn us that the thrill of day trading almost always leads to major losses for beginners. These heavily gamified designs kind of push you into making impulsive, emotionally driven decisions. On the flip side, though, you have the passive, proven safety of long-term index funds, and those quietly build wealth over time. You don't need to be trading every single day to make money. Actually, scratch that. When it comes to investing, doing the exact opposite is usually what works. Moving on to part two, why boring investing wins and the power of the set it and forget it mindset. Check out this fantastic quote that popped up in some community discussions. Reddit user AccomplissedWash4455 said, "Fidelity if you want a solid foundation. Like it's a boring answer, but it's boring in a good way." I love that because it perfectly captures the mindset of a successful long-term investor. Think about it. When it comes to managing your life savings, you really do not want an adrenaline rush. No way. You want boring. You want reliable. A platform that encourages a steady set it and forget it strategy is exactly what's going to help you sleep at night while your money quietly grows in the background.
And speaking of sleeping at night, boring also means structurally safe. If you're using a legitimate regulated broker, your money is protected. You want to look for platforms that are members of the Securities Investor Protection Corporation, or SIPC. What that means is, if the brokerage itself somehow fails or goes bankrupt, which does happen, your account balance is protected up to $500,000. $500,000? Now that is the exact kind of rock-solid foundation you want beneath your wealth.
Which brings us to part three, dodging hidden app fees and spotting those zero commission traps. So the crucial point here is that zero commission does not necessarily mean free. Not at all. Many of these apps recover their revenue quietly right in the background. Two super common methods for this. First is payment for order flow, or PFOF. This is where the app makes money by routing your trades to specific market makers for a premium, which can actually end up negatively impacting the price you get. The other big one, especially if you're trading internationally, is FX markups. Say you're buying an asset in a different currency, the app might just slice a 0.25% to 0.50% cut right off the top on the conversion. And these hidden costs? They can heavily eat into your returns over time without you ever seeing a formal, itemized fee on your statement.
But you know, the costs aren't just technical. They are highly behavioral. Just look at this brilliant insight from Reddit user rough_wave_130. They said, anything that makes it too easy to trade tends to cost people more in mistakes than expense ratios ever will. Honestly, that hits the nail right on the head. It's incredibly profound because if an app removes all the friction and makes it way too easy to just instantly react to some scary news headline, you are highly likely to overtrade. And that emotionally driven trading behavior is, for sure, the biggest hidden fee of all. All right, part four, steps to start investing. Let's build your action plan. Now, before you even think about downloading an app, you need to follow these foundational steps. First up, maximize your tax-advantaged workplace accounts. If you have a 401k with an employer match or an HSA, you've got to prioritize those first. The tax benefits and literally free money from a match are just unbeatable. Second, when you are finally ready for a mobile platform, make sure to compare minimum starting balances. Find one that fits your actual budget right now so you aren't stressing yourself out financially. And third, really prioritize beginner-friendly apps that have built-in educational resources because you want a platform that teaches you how the markets actually work, right? Not just how to push a bright green buy button. And this brilliantly illustrates how, depending on your personal habits, different apps serve entirely different beginner needs. Let's look at three total standouts from our sources. First, Acorns. This is great for absolute beginners who maybe struggle to save. It just automatically rounds up your spare change from purchases, though keep in mind it does charge a flat $3 monthly fee. Then there's Betterment. This is an incredible robo-advisor. You basically just set your goals and they automatically manage the entire portfolio for super low 0.25% fee. It's completely hands-off. And finally, Schwab. Schwab is perfect if you want to actively learn. They offer fantastic money management tools, really comprehensive educational content, and fractional shares. Fractional shares are huge because they allow you to buy tiny pieces of really expensive companies for very little money. That leads us to part five, Webull versus Fidelity. It's really a tale of two entirely different philosophies. So on one side of the ring, we have Webull. Webull is custom built for advanced active traders who want deep technical data right on their phones. It features this highly customizable mobile-first design, incredibly advanced charting tools, and gives you access to extended trading hours. But maybe one of its absolute best features for beginners who do want to learn active trading is its award-winning paper trading simulator. This is super cool. It lets you practice complex strategies using virtual money, so you aren't risking a single dime of your own capital while you learn the ropes. But let's contrast that with Fidelity. Fidelity represents the rock-solid long-term haven. It really prioritizes investor education and deep fundamental research over any kind of flashy mobile gimmicks. They offer a very clean, reliable web interface, and crucially, they do not use payment for order flow for stock trades, meaning you get excellent trade execution. Plus, if you ever get stuck, they are renowned for having stellar US-based customer service, like a real human being actually picks up the phone to help you out. Let's move on and see how this builds when we put them side by side. The difference is stark. Webull offers high complexity and rapid mobile trading. But remember, it relies on PFOF and offers mostly digital-only support. It's a tool made for active market participants. Fidelity, however, is structurally designed for long-term wealth management. It's an app that can grow with you from a total beginner to an advanced investor, offering zero commissions without routing through PFOF for stocks, and giving you that robust phone support we talked about. So we're looking at two entirely different ways to interact with your money. And that right there is really what you need to take away from this explainer today. The app you choose isn't just a piece of software on your home screen. It forms the environment that will radically shape your trading behavior for years to come. So you have to ask yourself, do you want an environment that encourages constant rapid-fire action, or one that rewards boring, steady patience? Knowing all that, which platform truly fits your long-term financial goals? I'm going to leave you to think on that. Thank you so much for joining me and learning with us today.